Hello, I'm Dr. J from OptionMonster.com. The reason Jamie's reports are so valuable, folks, is the VIX is a metric of risk in the market. So as it picks up, that means people are worried about protecting. If the market's been going up, when their VIX is going up, well, then that means they want to protect. They're worried about the market rolling over. If the market's been going down very hard, well, obviously, then they're worried that maybe the market makes a U-turn and goes to the upside. So you got to watch the VIX. That's why this report is so important. Remember, you can follow us on Twitter, twitter.com/optionmonster.com. Take it away, Jamie.
Welcome. This is your Option Monster Volatility Sonar Report. From the floor of the SIBO, this is Jamie Tyrrell of Group 1 Trading. Well, what looked to be a big update for the market has eroded. The VIX was down big this morning with the front month June future touching as low as 28.05. But as the market has melted, the VIX has popped right back up, and we're just under 30 at about 29.5. We're seeing a couple of interesting dynamics in the VIX right now. One is the tightening of spreads between the bid and the ask, especially in open outcry. A good example of this is the June 30-32 call spread that was quoted today. It was worth about 50 cents, and an in-crowd market might be 45-55 during a typical time. Right now the spread was 50 at 52.5 cents, so 2.5 cents wide as opposed to a dime wide. There's a number of factors involved in this. One is that we've dropped down in dollar price from about 50 to about 30. So the hedges, if you miss your hedge, you're probably going to miss it by less. The options are probably priced at lower dollar prices, and spreads can move down in proportion with that. Another is competition. We've had a lot more people in the VIX pit. We've had a lot more people paying attention to it upstairs, and that tightens things. And the third factor is something that's developed very recently, and that is differing opinions among the in-crowd market makers. A lot of people were very aggressive in wanting to buy that, others wanting to sell it. Typically, in-crowd market makers have very similar values, but in the VIX pit, we're emerging, and there's a lot of people who generally like to sell at the levels things are trading. A lot of people generally like to buy. All this combines for tighter trading spreads that we're seeing right now. In trading, there were a couple of big orders that went up. In June, it was the June 30, 32.5 1x2 call spread that traded for a nickel. So if you bought it for a nickel, you're buying the 130, you're selling the 232s. And this is just people wanting differing kinds of upside protection. The person who buys that 30 gets protection between 30 and 35 at the expense of protection above 35. The person who sells that 30 is really getting that extreme upside and at the expense of giving up that 30 to 35 range. The other big order we had was the August 47.5 calls. Had a buyer of those 10,000 times for 90 cents. That's all we got going here. This is Jamie Tyrrell with Group 1 Option Monster.